All right, so we had quite an interesting day. The power of three that I was discussing recently has worked out very well. In fact, it has hit the technical target of the range low. The next target, obviously, is going to be here, right? Demand, which we've almost hit. We're kind of lingering above that right now. And there's really only one way that I can really foresee this thing ending bullish. Well, there's two ways actually. There's two ways that I could see this thing ending bullishly. Okay, I'm going to give you those. I'm going to show you what that is very quickly here. Option A is going to be what we see here already, upside down. Now I have discussed this before. Okay, I have discussed this before. I'm just reminding people of this one, but ultimately what I'm looking at is possibly a deviation of this range low, another accumulation here, which would represent an upside down power of three, where this was the accumulation. After all, the manipulation actually happens down here, and the bullish expansion away occurs, breaking structure back within the range. Now, generally speaking, you'd want the manipulation to be, well, it doesn't have to be comparable in size to the last one, but this isn't really suitable for a manipulation phase for such a significant move. My personal opinion is that if we end up bouncing prematurely, especially without hitting demand here, and or bouncing without creating a more elaborate looking range such as this, I think there's a really strong chance that we're going to put in a lower high in here, somewhere's in here, in this range that we dumped down from today. Again, this is an internal range. Think Russian doll effect. You have ranges within ranges, right? So using my range theory, if we were to come in and do something like that on a bounce up, again, this doesn't have a true accumulation form, or it's an accumulation that's lacking in a way, then I do believe there's a really significant chance that should structure break bearishly up here, we're going to see a very, very aggressive sell-off. And actually, my next target, which I've talked about before as well, this is more or less a reminder. My next target is all the way down here. Now, I've heard some people say things like, "Oh, it's such a crappy looking zone down here, this and that and this, and I think we're going to go to 74K." Okay, maybe we do, right? Maybe we do. However, let's be real here. What do you have here? You have a classic TWN accumulation, right? I've been giving this stuff out for years, guys. This stuff works. It works and it always will work, right? We have a range deviation. You have a swing low forming in a downtrending environment. You have a swing low, swing high, swing low, swing high, swing low. Deviation. That did not break past our threshold. You have a bounce back within the range. Tap one, tap two. Oh, look at that. If we extend the range over, what happens again? You take it for another tap. That's a Model 1, an M1A, if you will. A Model 1 accumulation schematic, okay? This is a Wyckoff model. I didn't reinvent the Wyckoff schematic. I made it tradable, It's my greatest accomplishment. So we have this, tap one, tap two, tap three, price smashed away, right? So you have price smashing away. Now, as it smashes away, it leaves behind something. What does it leave behind? It leaves behind an inefficient bit of price action, a void in the market, okay? Now, typically speaking, I don't know why we have a $39,000 level marked out there, but typically speaking, if you create a significant move from a significant area, and we know this was significant because it backtests the old range high. The old all-time high was basically backtested on that third tap. Maybe not to the exact dollar, but friggin' close. Look at this. Okay, it's not to the dollar, but that's really, really close. That's a beautiful RIMC, right? You have a range, you have an initiation, you have a mitigation for the continuation. Now, again, it wasn't to the dollar, okay? But perhaps on some exchanges, maybe that did hit to the dollar. We don't know. I mean, you could spend time to research it, but the reality of the matter is, it doesn't matter, right? It's close enough. We're talking crypto here. We're not talking traditional markets. If it was a traditional market asset, front running it, I wouldn't feel the same way. But we're talking crypto. You get these variances in crypto that you will not see in the traditional market, So now we have this with our significant back tests. Okay, what's left behind? Well, you had a range in price. Where's that range in price? Oh, I already have it highlighted. Look, here's your range. You had a range in price. Price broke up from that range. Did it back test the range? From an internal standpoint, no, there's no backtest. So if anything, where would it be, like, where else could you put in a significant low? Clearly you have institutional involvement in here. This is a sign, if not the sign, of institutional buyback. Look at this. Look at that, right? Trapping traders below the range low, absorbing shorts, and then pushing away. It's exactly the perfect recipe for an institutional zone. This is an institutional zone. So there is a very, very high likelihood, in my opinion, that if we see any kind of structure flippage in here, where market structure is no longer looking bearish, we make our way down, we start busting through localized demand. Maybe we do something like this where we come up, we start making our way down, where this was merely just a trap to trap traders right in here. I'm using my MacBook, by the way, guys. Bear with me. I'm not very good at my MacBook yet. So if we trap traders up in here with a relief bounce, aka a dead cat bounce, and we start pushing down and taking the low from which we came, which would be, I don't know, we'll pretend right now that's 98K. We'll just make up a number, right? Whatever low we bounce up from, wherever that may be. If we fail with a lower high again, and we make another lower low, and price is beginning to smash down, I can guarantee you we're coming for here. I can guarantee you we're coming for here. And when we do, the question of the matter is, are we going to hold it? And I think it doesn't necessarily have to go like that. People are thinking, oh, because there's no volume in here, there's low volume in here. That I've seen it like 10 times now across different, X accounts and what have you. People are like, oh no, it has to smash away. Okay, it could smash away, sure, but it doesn't have to, right? Just like this has to be a target. No, this doesn't have to be a target. In fact, if you go back, let's do a little research here together. Let's go back and let's look at a couple things. Now, again, bear with me because I'm on my MacBook, but how about this? We're going to hide all this for now. Call it idea one. We're going to hide idea number one. We'll refer back to it. But let's go back in time. Let's do a little history lesson here on Bitcoin. Let's go to the daily time frame. And we're going to go way back here. And let's go back to the first phase. I'm going to call this phase A of the bull run of 21. And this is B, right? So you got A, you got B. All right. I'm not going to keep them labeled because it's going to get all messed up when I go to a lower time frame. But you get my point. Phase A, phase B. All right. Now let's go with the bar replay tool. And let's go to here. Now I'm on the daily time frame. Let's drop it down maybe to the 6 hour. So what happened in here? It's not quite your traditional power of three. You had high time frame structure distributing on this top, right? You have one tap, two, three. If you're drawing it using ranges, you had a range deviator. Oh, look at that. Oh, look at that. Who would have guessed? Right? Again, one of my greatest accomplishments. So price deviated to high. It had a tap one, created the range high, created your range low. Price deviated to high, trapping traders here, and then it smashed down. Very traditional, right? You see this all the time. It's been happening throughout history for eternity. And then what happens? Oh, look at that. It's holding the low. Okay. So now that it's holding the low and breaking back within the range, everybody's mega bullish. But they ignore this, right? What did price do again here? Again, it's distributing. Price is rounding off, it's unable to break through supply successfully. It's unable to fill this entire inefficiency that was left behind. It tried to, it definitely tried to, but we couldn't fill it all, right? The key was breaking above that inefficiency and holding above it. We couldn't get that. Price rounded off back then. It was showing many signs of weakness and eventually capitulating down yet again. Okay, but where did it go back then? Well, let's take a look. Where did it go back then? Oh, look at this. It hit a demand range. It hit not just any demand range. It hit a demand range that did what? Or that had what? You see it? You had a swing low form, a swing high form. Look. Again, perfection. Look, 1, 2, 3 drives. Break a structure, confirming the play. On the higher time frame, validating this model 2. This is a model 2. A model 2 looks like this. Right? You don't have 3 drives lower. You have, it's almost like a head and shoulders, right? To put it simply. You have that accumulation effect. So not only is this just demand, it's accumulative demand. You have accumulation-based demand, okay? Price reacts from that, price holds it. Sure, it may wick it. It can do whatever it wants to do. It doesn't matter. It's holding that zone. If we look back, look what happened. Back then, we came back to significant accumulative demand in an institutional buyback zone. And what did price do? It held it, ultimately putting in that second phase high, phase B, right? So if anything, what we have up here, let's turn on everything again. If anything, it sort of looks just like it, doesn't it? Right? You have the same kind of effect. Now, it's a different model. It's a Model 1 here, whereas the previous was a Model 2. But that's besides the point, right? That doesn't really impact how we should look at this. So if we do see signs of buyback, which could be a multi-month long accumulation, just like the summer of 2021, okay, it could be. If we see evidence to go long in here and buy in here, we look for that, right? 1, 2, 3. If you see anything in here, it doesn't have to be a 1-minute market structure flip, guys. You know, it doesn't have to be a quick little move in and move out. Whoever's telling you that doesn't know what they're talking about. I promise you, they don't know what they're talking about. They're full of it. Doesn't have to. Price can spend as much time as it wants to in here and accumulate properly, right? So we'll see. We'll see what we get. Now, something else that I also want to point out is another fractal that I've been looking at, and I want to kind of show you guys something here. So let's go and look at that very quickly. And this is why I think we still have a good chance of making our way down to here. So again, I'm going to hide all this again. And I'm going to try to show you what I'm talking about here. Again, I'm on my MacBook. I'm not as efficient on this thing, but I'm still making a valid point. So if you're following along, you should be able to follow along, I mean, pretty easily. All right, so what do we have here? We have, again, a power of 3, which I have been talking about for quite a while now, right? Into significant supply. Here's your significant supply. This is the manipulation. Price pulls back within the range. Let's draw it in properly again. You have your range low. You got your range high. Now, it did surpass the deviation threshold, but if you didn't adjust it up, you didn't adjust it up. That was it should have been adjusted right here. Again, it's not closing above it. The key is closing. This is not closing. This is a bad, bad, bad sign. You want to see a continuation and an interest in buying here, but instead, the sells overruled the buys. Price begins to close back in the range, warning shot fired. What happens? Price retests the only supply that makes sense to retest. You break down, you have the initiation leading down here for the mitigation for the continuation, the mitigation for the continuation, the mitigation for the continuation. Unless what happens? Again, unless we reaccumulate in here. All right, let's go back. Now, I don't think I'm going to be able to take a screenshot of this, but I'm going to try, I'm going to try something here. Let's see if we can pull it off on my MacBook. I may not be able to. I'll try my best for you guys, but I may not be able to. So keep that model in mind, right? Keep that model in mind. I can recreate it over here anyway to show you guys. What happened back here? We're looking at December of 2021, right? You had a big sell-off, just like we have now on BTC. You have the initial range high forming, a manipulation, although a very slight manipulation. It is still a valid manipulation nonetheless. You have all this liquidity waiting to be swept out. Price closing back in the range. It closed in so aggressively. Here, I'll draw the range in so you guys can visualize this better. Here's your range. Again, it didn't close above it aggressively like we had this time around. And that's the thing. When you see fractals, they don't have to be candle for candle. That's the biggest misconception there is regarding fractals. Okay? It's the narrative. It's the narrative of what price is doing. It's the return to zone. It's the overall, supply and demand structure of the range or the area of price. It's everything. Structure, supply and demand, accumulative distribution theory. You have to apply all that logic. The overall narrative is what you're looking at, right? So price tried to deviate here. It tried to accumulate here, right? It broke down and it actually produced what could have been a valid power of 3. However, where was it doing it? It was doing it in a zone that was already hit. We already hit this zone and we already tried to bounce from that zone. But that zone clearly failed. Otherwise, we had no business, coming through and breaking this zone, right? So for me, now I know some people would draw it like this. They'd be like, okay, Mr. Phoenix, I'm going to draw my demand range in using your theory, your concepts like this. I'm going to draw it kind of like that. And I feel like you're cheating the system to draw it this way. Some people would just draw it like this. I've seen a lot of this where people are drawing in the demand ranges like this. Oh, that's the whole demand range. We didn't break that here. Actually, that's very, very incorrect. I'll show you why that's incorrect. And even still, yes, you did. You went right through it. But it's incorrect because you're cheating structure, right? I've seen people try to cheat the structure here. You cannot cheat the structure here. Now, I'm on the 4 hour, but if you were on the 6 hour or 8 hour, you wouldn't even see this little down, up, down. So let me draw it in the way that I see it. This is how I see it, right? It's not, for me, due to the time displacement between taps, this cannot be a Model 1. That's not a Model 1. Just because it has 3 drives lower, they can't be spaced apart like that. Especially if tap number 2 did not do anything significant. If it didn't break structure, it didn't do anything, it didn't overrule supply, then you cannot say that that's tap 2. This is a Model 2, guys. Here's your break across. Here's your third tap. So if that's your Model 2, okay, where's the last significant area? What caused price to push up in that model? Well, what caused price to push up was right here, right? This is where the aggression began right here. So that is your area of demand. So pull it over again. Again, it was already hit. And then price started closing below it, wicking below it, right? So could we basically recreate this again? I really do think so, because we have a significant target left behind. Now, back then, obviously we farted around here. We went a little bit lower and came up higher and blah, 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 and ended up finding that 16K low eventually. I'm not saying that's going to be the exact play here. I'm just trying to make this, a very valid point that even though we could accumulate in here as well, you still have to watch for a continuation. So if you see this form in the current Bitcoin range, which looks pretty much identical to this, besides the manipulation was a little higher, and you're seeing that structure fail prematurely before it can take out any aggressive higher time frame swing structure from the range high leading down to that manipulation low. Okay, I'm talking about the swing structure, and it can't get above even like the value area low of the range. Oh, look at that. The value area low is way up here. If it can't get above that, you're not going to get acceptance back within, and you have no chance at tackling this high, right? So we're seeing a premature sell-off or flip in structure or distribution, then we cannot be targeting here or all-time highs, even if we have what appears to be kind of a flip-flop power of 3 where you manipulate up here and then you manipulate down here. Okay, so there's many different factors at play here. And this fractal, again, this looks very similar to what we have now. Again, it's not candle for candle, but it's damn close. It's as close as you're going to get it for a fractal. There is no closer fractal or even potential fractal. And actually, if this were to play out up until this point, that would land us pretty much on par with that accumulation idea that I talked about at that institutional level. Now, some people will go like this and they'll measure this way and try to match it up and say, well, that's 21% of a move down. Where's 21% from the current low? Well, let's see. But to be honest with you guys, even if that did match up, that's not really an effective way because we're trading at much, much, much different prices. Like these are double the price from back then, right? So 21% would actually put you at the near low of that accumulation model. So I don't think that's a valid way of making a comparison simply due to the overall price point of what we're trading at now in Bitcoin. It's not a great way to do it, guys. It's really not. So what that could look like, I'm going to go to the 15-minute and just draw it in for you guys. What that could look like is basically this. If that were to translate itself and history were to repeat itself again, we would see something like this. Okay, you had your manipulation schematic. We know that. Here's your manipulation up here. I'll draw that in. We had the manipulation. And now we have potentially, because we know that there is demand here. I just, I don't have it overlaid right now. But if we see this and we start forming an accumulation, whether it's a Model 1 down here or a Model 2, you can clearly see the range forming, and that range starts breaking back within. If we see a sell-off prior to anything significant happening, aka a Valerie low reclaim, aka higher time frame structure being reclaimed. Here's the Valerie low at the moment, and you're seeing a loss of a level like that. Let's pretend this actually does happen the way that I'm drawing it. Okay, does that look bullish to you? Should that be bullish? No. A power of 3 has no business breaking back like that. So if we were to play out almost a repeat, and this were to continue to repeat, the 2021 fractal, well then there's a damn good chance that we're going to see a push down into that lower demand zone, that institutional zone. And me personally, I truly think there's a great chance that we're going to bounce from here. An excellent chance that we're going to bounce from here. I'd be surprised if we didn't get a massive bounce from here, personally. I would. I'd be really shocked if we didn't bounce between 88.5 and 74.5. And in fact, I think we could hold the upper half of it, really, but we'll see. Now, again, if we start, the longer we accumulate in this zone, the better the chance for a shot at new highs. And this is where I'm kind of having you think back to that summer of 2021 fractal that I just showed you guys. Not the last one, but the one before that I talked about. So the longer that we accumulate and the bigger the range, the better chance at retaking these highs. Okay? Otherwise, if we just kind of like dip in and then dip out, sure, we may bounce a bit and, maybe we make our way all the way back up to this inefficiency here. But I think it's going to be a lower high. I do. I think it's going to be a lower high situation where we go lower, personally, if we don't spend time accumulating here again. That's just my 2 cents on the matter. Again, I'm not really one for making these massive high time frame predictions, but I've been seeing a lot of crazy stuff being posted and shared all over the place, and it gets a lot of attention. I don't know how it does. I really don't know what goes through people's heads and how they see people that act like they don't lose and what have you, and they follow them because they think they're the bee's knees, so to speak, while they more or less just yeah. I'm not gonna say it. Listen, I won't even say it. You know, people should you'll learn quickly because you'll know if somebody's full of it or not the more that you watch them, is all I'll say. And you just got to be careful, right? You got to take everything that you see with a grain of salt, right? Especially those that appear never to lose and they get every call right and this and that and this. I mean, you really got to be mindful that that's never the case, right? Even myself, I came up with all these concepts. They've been ripped off from me, renamed. You name it, it's happened to me with these concepts. Yet, I'm not here pretending that I'm some guy that doesn't lose trades. I'm not here pretending that I don't get these tops and bottoms wrong and what have you. That happens all the time. That's part of trading. But I am damn profitable, and that's all that matters, right? So in this case here, it's going to be a very interesting development, I feel. We're going to have an answer fairly soon, I would imagine. Let's go to the weekly, actually. See what the weekly looks like. Now, weekly structure, if you're drawing a market structure, technically already broke here. But if you go to the monthly time frame, again, what does monthly structure tell you? Well, monthly structure tells me, just like it told me back here at the beginning of 21 when we came down for that retest, it tells me that we can put in a higher low for a higher high. Higher high, higher low. Higher high, higher low, higher high, higher low, higher high. Again, it's going to be better, though, if we accumulate in here, just like we did right here. So it's going to be a very, very interesting next few months, I feel. If for some reason that doesn't happen, again, because I can't be right all the time, I can tell you what makes the most sense. But if that doesn't happen and we were to break through that 74K level and we get acceptance back within that macro range that we've been trading in for eternity, that isn't good, right? Let me hide all this, show you guys what I mean. So if this is a big range, which it is, it's a big range that had multiple deviations. If this is a big range of price that we spent, actually, to be more precise, I could start the top right here. I'm not going to count this part of it because that's your uptrend, right? That's not really your swing high forming in an uptrend. 1,300 days, approximately. You do not want to see price back in there. unless it's a quick wick under, kind of like this, where it just slightly deviates that low, and you get some kind of like massive sell-off and buyback all at once under this low, you do not want to see price closing back within that range in any way, shape, or form, right? Closing back within, I'm going to say 73.4. I will give it a little bit lower of a number, 73.4 instead of 74.5, simply because I'm giving it a little bit of breather room, right? I'm going by the candle bodies in this case, because it is more significant given the circumstances of this move, right? If we start closing back within, I think there's a really, really strong chance that we're going to see that this is basically the bear market top. And we might get a two-phase bull market still, even if we do break under here, but we'll leave that discussion for another day, right? We'll leave that discussion for another day. We're talking way, way, way into the future here, right? But typically you would not want to see this range being reclaimed. If so, you're probably seeing, again, a bear market, a multi-year bear market where it takes, ages and ages and ages to find a true bottom, blah, 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 blah. Wherever that may be, we don't know yet. We can do TA on it, but what's the point right now? We're not that far ahead. There's no reason to be talking about that right now, really, right? So why don't we play what's locally in front of us? Worry about the significant areas of demand that are remaining, such as this one down here, this institutional zone that I pointed out many times that I wanted to talk about tonight. We'll talk about this demand zone right here that we just hit, which is right here. And we know that if we break one, where are we going? We're going to the next one very clearly, right? If we break 93.3 and we're closing, even if we start closing too deep into this zone, that would basically invalidate that power of three idea, because price shouldn't really break much lower to be a power of three here for this local range. It shouldn't. Could it? Absolutely it could, but it shouldn't, right? So in this case here, again, if we're looking at what makes sense and what doesn't make sense, we're on the 4-hour at the moment. On the 4-hour time frame, I'm on Coinbase, so the wicks don't look the same. But if we go from that October, now remember this October wick was actually like 101 on Bybit, etc., like way down here. But if we're looking at this range, again, this range shouldn't really go too low here, but we'll see what we get for the manipulation phase. If we do get a manipulation phase, we don't know if we're going to get one yet, but if we do, we're going to see evidence of it. Now it's trying to, I will say this, price has been trying to hold the zone here. And obviously because we came down so aggressively, we kind of left a lot of easy liquidity here. I think, if we do start breaking above here and back testing, you could look for longs, scalp longs anyway, until you're proven otherwise, right? So if you see something that you like, you're clearly breaking above this local range high, you got that evidence of the 10-minute, 15-minute market structure break, a back test that you like that you can refine your entry on instead of using like ridiculous stop losses. If you want to play that game, go ahead. But you're going to need to see structures flip, right? Either way, whether you want to refine the entry or not, you need structure to flip. So if we start flipping structure in here, I'm just going to make up a scenario here. Something like this happens, right? Okay, well then again, start looking for backtest longs. So we backtest, you're seeing a reason to long it, you got your internal structure favoring longs. You can look for a push up, maybe to an area such as this. This is your last manipulation, right? Price manipulated above, flipped. You have actually a very nice looking demand to supply flip right there. Maybe that's where we backtest for the next lower high, right? But either way, if you have the sign to try along, I'm going to try along. Either way, I know I'm going to make money off it if it confirms itself. Maybe it's not the long that takes us all the way back up towards, 106 or 110 or 125, 126, but we can still make money on it, right? So I'm still going to look to scalp it if I can. So I hope that clarifies some things. I'm going to upload this one on my YouTube page, and we'll see what we get. We'll definitely see what we get. I'm going to start posting more stuff on YouTube soon anyway, and some educational content, so stay tuned for that. That'll be coming up in the near future. And yeah, I hope you guys make good with that information. Again, you don't need to panic into any position. You can wait for the market to show you what it wants to do, right? This does look like an accumulation. Of course it does, right? You have that evidence of a Model 2. But again, is it going to live? Is it going to make it? Is that all we need to go higher, right? It's a pretty quick move so far. It's hard to say. But I know, again, if you have your confirmations, you could look for a long, and if it turns against you, well, then close the long, and you can start looking for shorts, right? From a higher time frame perspective, I really do believe in what I said at the beginning of this stream. So we'll see what happens. Cheers.